Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index traded in a narrow range last week between 97.25 and 98.15. Fresh inflation data came in broadly as expected, keeping pressure on the dollar and giving the Federal Reserve room to ease policy against a softer labour market backdrop. August CPI rose 0.4% month on month, a touch above forecast, while the annual rate held at 2.9%. Traders now price a 93% chance of a quarter-point rate cut at the 17th of September, with growing odds of a deeper move. WTI crude rebounded about 1% last week, recovering the prior week's 2.3% drop. Prices initially spiked nearly 2% after Israel launched strikes against Hamas leadership in Qatar, though the rally later faded. Geopolitical risk escalated further when Poland intercepted a Russian drone targeting Ukraine, the first such direct involvement by a NATO member. Still, despite rising tensions, oil lacked the momentum for a sustained surge. Ongoing fears of oversupply continue to weigh on sentiment, and prices actually slipped about $2 from last week's peak. Gold markets reacted to a mix of signals last week. Inflation data showed resilience, while labour market numbers revealed growing cracks, a combination that kept traders on edge. The result has been stronger bets on a Fed rate cut at next week's meeting, which underpins gold prices. Normally, higher inflation would stoke expectations of tighter policy and weigh on bullion. But this time, the softer jobs backdrop dominated, reinforcing gold's safe haven appeal. The dollar also weakened following the data, providing further support. The dollar-yen pair continues to consolidate just below the 148.00 mark. Political uncertainty in Japan, highlighted by Prime Minister Shigeru Ishiba's resignation, has clouded the Bank of Japan's outlook. Investors worry that leadership changes could keep rates lower for longer, discouraging yen buying. Broader risk-on sentiment is also sapping demand for the yen as a safe haven. At the same time, Japanese economic data has largely confirmed that the BOJ remains cautious about normalizing policy, capping aggressive bets from yen sellers. The euro gained traction after the European Central Bank held rates steady at its September meeting, keeping the deposit facility at 2%. Policymakers struck a more upbeat tone on growth and inflation, dampening expectations for further cuts. That gave the euro a lift above 1.17. Across the Atlantic, US data told a different story. Jobless claims surged, inflation ticked higher, and markets priced in 3 Fed rate cuts this year, up from 2 just weeks ago.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.